The limited company mortgage market is becoming increasingly competitive. So pre the tax change announcements, there were lenders lending to limited companies, but it was by no means fashionable. And the pendulum has really swung in that respect. So there's lots of people doing this kind of borrowing now, and there's a lot more demand for it. So with demand comes lenders moving into that market. With more lenders coming into the market, there becomes more competition and the pricing comes down. So things really have moved on. There is definitely still a price difference between borrowing personally and going through a company, but that differential is really reduced significantly over the last few years. In terms of why you'd want to use a broker when you're looking at limited company borrowing, I think it's really important that you do your research. There's, lots of choice out there in terms of obviously interest rate options and product types, but more importantly, it's about getting the right advice in terms of the setup for your own company. So who is the lenders taking the personal guarantees from? Which solicitors should I be using? All the kind of the stuff that isn't immediately obvious, but actually makes your deal particularly unique to you, and will need really good advice. A personal guarantee is where the borrower is saying, okay, so you're lending to my company and, if I don't pay my mortgage and you have to repossess the property and there is a shortfall in terms of the amount of money that is received and how much I owe you, then I'm personally responsible for that debt. In the same way that if you borrowed the money personally, the buck always stops with you. So that's what the personal guarantee is. The term unsupported purely means that the personal guarantee is not attached to other assets, so for example, your own residence. In terms of how that affects, or you're offering the personal guarantee affects how much you can borrow, when lenders are looking at how much they will lend to you on the buy-to-let, they're looking at two key drivers. So it's the amount of deposit available and the rental income. In terms of your own borrowing, if you're offering the personal guarantee, lenders tend to sit in two camps. We either need you to be earning over £25,000 a year, or we just need you to earn something. We don't mind particularly how much that is, you just need to be in receipt of income. So the PG is not affected, or how much you earn does not really affect whether you can give the PG or not. Deposits for limited company lending are just like when you're borrowing through traditional or borrowing personally. So the maximum loan to value a lender will lend to limited companies is 85%. The very cheapest pricing comes in at 50% loan to value, and then there's a kind of, a range in between those 2 points. And as with traditional buy-to-lets, there is a rental calculation that underpins being able to borrow at 85% loan to value, for example, which is where the lender looks at the rental income the property is going to achieve and wants to be comfortable that that rental figure is sufficient to support the mortgage interest payments each month. The SIC code, the Standard Industry Classification Code, it's a reference point really for lenders to understand the nature of the business which they're lending to. So, a dentist would have a certain code, and IT consultancy would have a code, and letting of property also has its own code. So when lenders are looking at lending to a company, they reference the SIC code to understand what kind of business they're lending to. The majority of lenders, buy-to-let lenders, want to lend to a company which is called a special purpose vehicle. So that's a company which has just been set up with the pure intention of renting property out. And the SIC code is the code that tells the lender this is what the company actually does. So actually it's really important. If it has a different code, it's not the end of the world. There are lenders who lend to trading companies or non-SPVs. But having an SIC code which is relevant to letting of property means you'll have access to far greater choice in the market. There's no maximum number of properties that you can own through a limited company, and lenders don't say, well, actually, you've got 5 properties in this company, so we're not going to lend to you. What you will find is that some lenders would say, well, okay, we'll only lend to someone who has a portfolio of 10 properties. Some lenders won't lend to anyone who's portfolio landlords. That's when you have 4 or more mortgage properties. And they've all got their own different rules. The other one is that lenders will often cap their own exposure to a borrower. So they might say, look, we don't mind how many properties you've got mortgaged across the board, but we will only offer you 10 mortgages, or we'll cap our exposure to you at £2 million, whatever that might be.